When you listen to the advice of Phil Grande at philsgang.com, you'll find investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard, things are tough. Boy, the market's really screwed up. And I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up or why there's continued inflation or why the bank rates are going up. So you understand, especially yields. The most important thing to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com. What does it take to be a successful investor in the stock market? Developing your skills and learning from an expert like Phil Grande and philsgang.com.
It doesn't have to be hard or complicated to learn how to invest in stocks properly. It's like anything else. You're going to golf, or you're going to learn how to play tennis, ski. You need to be with someone, learn off of them, one-on-one. Now that can be really expensive, cost thousands of dollars, but I have a program that you can join for 10 days free.
Go to philsgang.com and sign up for a free 10-day trial. Phil Grande has developed tools to teach you how to invest in stocks properly. Not only when to buy stocks, but how to sell stocks short.
85% of people in the market lose money. Get out of that group by just joining Phil's Gang.
Now you can learn to invest like a pro with a pro. Phil Grande. Take advantage of this special offer for a free 10-day trial at philsgang.com.
Try it. 10 days free.
That's philsgang.com.
philsgang.com.
I've signed up, and I've learned an incredible amount from Phil and Steve. The staff at Phil's Gang gives platinum-level service and stock recommendations. It's as simple as that. At the end of a month or so, I've always been in the black. Phil's Gang is a class act. I'm happy to be a member.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. That's 877-600-4264.
You're not alone. 80% of those in the stock market, just like you, lose money. Hi, I'm Phil Grande, philsgang.com. Why do they lose? Because they don't know how to short stocks in down market. That will change once you use my patent Pro 2 color-coded chart. It works. The technology works. And it not only gives you an edge on the upside, but Pro 2 will put a smile on your face on the downside. That's right. Check it out. Free 10-day trial at philsgang.com.
This message is for those of you asking the question, what do you think the stock market is going to do?
Hi, I'm Phil Grande at philsgang.com. Well, you don't have to ask that question when you listen to my radio show, because you're going to know exactly what the market's going to do. You're going to know if the market's going to go up, you're going to know if the market's going to go down, or the market's not going to go anywhere.
Phil Grande and philsgang.com takes the worry out of investing.
Pay attention to my show, philsgang.com. It's fun, entertaining, and you get the greatest information, especially stock picks.
That's philsgang.com. When the stock market is volatile, how do you invest intelligently?
Hi, I'm Phil Grande at philsgang.com. There's no need for you to be panicking in a market that goes up 800 points one day, 700 points, then it goes down again. All you need is good advice, need good direction. You don't get that from your CNBC and the Fox business and all these crazy shows. You don't. Here's what you get from them. Thank you, Jim Cramer. But this is something that this really bugs me. Listen to this.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What? Their responsibility is to their partners and shareholders and not to you? Check my site out, philsgang.com.
When the stock market is up one day and down the next, you need the experience of Phil Grande at philsgang.com.
What a difference it makes in your financial life. philsgang.com. It works.
I've been a Phil's Gang member since 2014. Over that time, I've generated over six-figure profits. Following Phil, his charting system has really been a huge impact on my career and my life. I would recommend Phil's Gang to the mom and pop out there. I would recommend it to parents teaching their children. I would recommend it to grandparents. If you really trust in their system, you will do well.
For more information, go to philsgang.com or give us a call at 877-600-4264. When the stock market market is up one day and down the next, you need experienced advice from a pro.
Hi, I'm Phil Grande of philsgang.com. I know you're sitting there watching the stock market. You're going, what? Is this nuts? Market goes up 700 points. Next day it goes up 800 points. Then the market goes back down. Then it goes back up. What that is volatility.
You want to invest your money and grow your wealth. How do you invest intelligently?
But you got to anticipate what's going to happen with the market. And that's what we give you. Information so you can anticipate in advance what the market's going to do, so you know what stocks to buy, you know what stocks to short.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
And welcome to my podcast. For those who don't know me, my name is Phil Grande, CEO of Phil's Gang. And I was named Entrepreneur of the Year in the United States. Inc. magazine, who features the 500 fastest growing companies. I brought 2 companies to that 500 list, and I also had I was also in President Trump's first book. With all that said, let's get back to work. What is going on? It's amazing. This morning or yesterday, the market was rallying, and this morning again the market rallied. And then all of a sudden it turned negative. The rally was because they were taking parking space in our head that's saying, look, things are just great. Jobless claims they came out with and said, do you know that less people are filing now for unemployment claims? Because the job market, the labor market is so strong. And retail sales, they're booming. Much better than we expected. Well, that's not true. If you go and take a look at the real retail sales and do the accounting like you should by units sold, you'd find that retail is in deep trouble. And they also said that the market was rallying due to a strong, as I said, strong consumer, but earnings are better than expected. The 88% of the companies already reported have beat their earnings. Well, that's a bunch of nonsense. They set their own earnings and they set the bar so low. It's incredible. So we're going to look at some stuff today and find out really what's going on. And the problem is you got to stop listening to the jibber jabbers, okay? Here, for example, talking about earnings, corporate earnings.
One of the also reasons why this market has been so resilient is corporate earnings.
Corporate earnings, really? Why don't we tell the truth about that? Now, right after 2020 to where we are today, corporate earnings have been declining. You have a handful of companies that are driving this whole stock market. But the inflation, okay, that they keep saying is at 2%, which is not true. We're really closer to 9 or 10%, but let's just use the inflation. High inflation has been squeezing the margins of these companies. And the other thing squeezing the margins, they've been in a habit since 2008 because of QE borrowing so much money. Corporations borrow money free, zero interest. And they have historic debt, corporate debt, just like consumers have historic consumer debt. They have debt. Why? Because interest rates were so low that corporations went out and they bought their own stock, okay? A lot of that money went to stock buybacks. But now the problem they've got is the earnings aren't good, except for a handful of companies, because when you go out and you borrow all this money, you got to pay it back. But interest rates, the interest rates are going from zero, the Fed rate, up to 4.35 today. Now think about that, from 0 to 4.35. And if you have on your books, let's say 300 million or 200 million, do you realize how that kills your earnings? It really does. So we're not being told the truth. But the bond market tells us the truth. You've got to stick with the bond market. And so the high inflation, the higher rates from 0 to over 4%, they've been squeezing these corporate profits, the majority. Yes, there's a handful of tech companies that are driving this whole market, okay? But these other companies, the majority of the companies, their profits are declining, not going up. And you really look at the real numbers, 2/3 of the S&P 500 companies, they have all lowered their forecast for earnings. So it's just nonsense. And the other thing that's really dangerous, what's been happening, is that if you take the top 10%, their net worth is $2 trillion. And they control about 68% of the wealth. And they have 90% of the stock market, meaning they control 90%. That's the top 10%. They have all that wealth, 68% of all the wealth, 90% of the stocks they control. Now let's drop down to the 1%. Now the 1%, they have a net worth of about 1.3 million. Now we're starting to drop, but they control 30% of all the wealth and 50% of all the stocks. So if you take the top 10%, the top 1%, and then go down to the 1/100th of 1%. Not to be confused with the 1%. I'm talking about the 0.1%, whose net worth is 62 million. So let's go look. 10%, their net worth is 2 trillion. The top 1%, their net worth is 13 million. And the top 1/100, their net worth is 62 million. But that 0.1%, that 1/100, they control 15% of all the wealth and 20% of the stocks. Now let's get to the real world. What about the bottom 50%? They're screwed. You know what their wealth is? They control 2.4%. 2.4% compared to the top 10% that control 68% of all the wealth. So 2.4 compared to 68? That's insane. Or take the top 1% and control 30%, but the bottom 50% controls 2.4? And they're trying to tell us jobless claims are dropping and people aren't signing up for unemployment and retail sales are booming. No. Here's what no one wants to talk about. There is a crack now, okay, in the foundation of the wealthy. We saw this before. We saw this movie before. We saw this in 2008. When you have all this wealth and you control most of the wealth, and now all of a sudden your wealth is starting to tank, because when people, you take the bottom 50% who have almost nothing and they can't borrow money anymore, cheap rates, and they're cutting back on consumption, that means that corporations' earnings are going down. And that means the very wealthy, they start to hurt. And once the very wealthy hurts, like in 2008, it's over. That's who you have to be watching. The very wealthy. How are they doing? People say, oh, they're just wealthy. You have to worry. Yes, you do have to worry about them. Didn't we learn that in 2008? Sure we did. Of course we did. So not only are the consumers struggling, it's so embarrassing they came out with these statements this morning when the consumer is struggling. And I'm not going to go over it all, but you know the auto repossessions are the highest in 17 years. Go through them all. But the problem is this. Let's go to the bond market. The bond market always tells the truth. It never lies. Never. It always tells you. The bond market's a wonderful place because the bond market tells you a couple things. It tells you what is going to happen in the future. And a 10-year bond The 10-year Treasury is wonderful because that's the one, that's the most important one, because that's the one that controls the interest you're going to pay on your mortgages, on your car, on your lines of credit for your business, on almost everything, the 10%. So the 10-year Treasury has been the most watched out of all of them because of things I just stated. And what's happened is this. When we started, let me show you here, if you can see this. Nobody wants to talk about this either. Let's go back here. When interest rates back in 2007, when interest rates were at 5.27. When they were at 5 point, now this is the 10-year Treasury. Very, very important Treasury. So they started to, remember the Fed cuts their rate first. And then when they cut their rate, what do? They start the QE. They start printing a ton of money. The Treasury prints all this money, and the Treasury gives the money to the Fed. The Fed takes the money, gives it to the 5 biggest banks, and the 5 biggest banks go and they start buying Treasuries. So when they keep buying Treasuries, the interest rates go down on those Treasuries, or the yield, so that you can get cheap mortgages. Okay, your credit card is a lower interest rate, your automobile, your business loan. So it was at 5.27 in 2007. Those rates started to go down to 0.54% by 2020. Then the rates started to climb. Here comes the problem. That's why you got to watch the bond market. Do you know how long the rates in the 10-year Treasury had been up between around that 4.3, okay, till we hit 5%, but let's just use 4.33. For 32 months. No one wants to talk about that either. What's that mean? We're screwed. When you have them cutting rates, printing money, to print all this money, so they go buy Treasuries, like I said, printing money, give it to the 5 biggest banks. 5 biggest banks goes buy all these 10-year Treasuries to drop the yields from 5.27 down to 5.4 so they can give a good spark. Yeah, that's the spark to market. That's the spark buying. It's phony, but it sparks everything. It's like a shot of heroin, right? And then, of course, everybody starts rallying. The market starts rallying because with those cheap rates, they buy cars, they buy everything, right? They buy stuff they don't need, they buy stuff they can't afford. They just keep buying and buying. Now, when we got to, as I said, you can't, what is the message from the market when the 10-year Treasury yield is sitting there for 32 months? It won't go down. It means you're screwed. Now, you got that problem on one hand, and you got the wealthy on the other hand. They're starting to get in trouble. Why? Because they own most of the stock. The top 10%, they own 90% of the stocks. That means their wealth comes, they got to depend on corporate earnings. And corporate earnings are getting worse and worse and worse because why? There's too much corporate debt. The corporations owe too much money. And the consumer, he's screwed. His credit card is tapped. They're repossessing his automobile. He's in bad shape. So it's not like you can take the very, very wealthy, the top 10% or the top 1% or 1%. Well, you can isolate them. No, you can't. No, you can't. So now go to the Fed. Now that was the 10-year Treasury. Now you go to the Fed rate. Let's see what the Fed's doing. Now that was, so you don't forget now, that's the 10-year Treasury has been stagnant for 32 months. You talk about bad news. Now we go and let's go take a look at the Fed rate. Here we go, right here. Look at the Fed rate. So you take the Fed rate, and we'll go use the same time. Okay, let's go to April 2007. Okay, so April 2007, same thing. 5.25. But see, the Fed can lower that rate. They don't need permission from anybody. But to get the 10-year one down, they have to go and buy. They have to print, which increase our deficits, increase our interest rates, everything. So, but this one here, they can do it themselves. So they dropped it from 5.25, okay, all the way down now. and the last rate was at 0.08. So think about it. They dropped from 2007, just as they're going right into the crash. They knew it was happening. They dropped it from 5.26 down to in 2022 to 0.77. Now inflation was up at 9%. That's a joke. It was really up probably 20%. But now they started to raise rates. So they had to, because we had inflation. So they raised rates. Now we've been sitting there, okay? The Fed has been sitting there for 20 months. 20 months with these rates near 5%. Look at it. So we've been there. So that right now, today, the rate of the Fed rate is like 4.3 something or other. But my point is, we've been at let's use 4.3. We've been at 4.3% for 20 months on the Fed. And 32 months at let's use 4.22. And 32 months on the 10-year. So the 10-year, we've been stuck for 32 months at a high rate of 4.22. The Fed rate, we're stuck for 20 months. This has never, ever happened. Why do you think Trump's saying, hey, cut? Because he's scared to death. He knows what's going on here. But nobody tells the truth. Be back with a lot more. Join my gang. Free.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
When you listen to the advice of Phil Grande at philsgang.com, you'll find investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard, things are tough. Boy, the market's really screwed up. And I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up or why there's continued inflation or why the bank rates are going up. So you understand. Especially yields. The most important thing to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com. Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call, 877-600-4264. Now, here's Phil.
Hey, welcome back to Phil's Gang. Join my gang. It's free for 10 days and learn how to trade properly, which means you're going to learn how to sell short as well as buy stocks. You wouldn't buy a car, would you? With just forward and no reverse. Well, that's what you're doing when all you do is buy and you don't know how to sell short. Let's get back to how they lie. Listen to this. This is Jamie Dimon.
The consumer's in pretty good shape right now. Unemployment's under 4%. It's been there for 2 years.
That's a lie. They don't count the 5 million people who stopped looking for work. They don't count them in the unemployed.
The consumer's in pretty good shape right now. Unemployment's under 4%. It's been there for 2 years. They still have excess money from COVID. If you go back to looking at the amount of money that was spent during COVID, it was $6 trillion. That basically went into consumers' pockets through various means and various programs.
Yeah, various programs, sure. What does that create? Deficits. That's why I have to laugh when they say wages are up 17%, home values up 45%, jobs up 10%. How'd that occur? Deficits. And you're going to get, and you're going to lose all of that. You're going to lose all of that. But here's the thing that's interesting. They're telling us how strong the labor market and how strong the banks are. Now, I told you some time ago that the banks were hiding over $500 billion in bad loans. $500 billion. They don't have to record them. The law is they don't have to disclose them. So if they were to sell, let's say they were holding a bunch of loans and they decided to sell them because they're running out of cash. Now they have to report them, but they don't sell them, they never have to report them. So the banks are in deep trouble. But not when you talk to the banks, oh, they're doing beautifully. But what about Wells Fargo? Wells Fargo borrowed $200 billion to stay afloat. That came out today. They borrowed $200 billion to stay afloat. But they're telling us, oh man, everything's great, everything's wonderful. Well, $200 billion, think about that, to stay afloat, to make sure the bank is an ongoing business. I bet you they had to borrow that money, or their accounting firms would have said, this is not a going business. No longer is it going business. You know, the accountants have to write that off every quarter for you if you're a real business or you're going down the toilet. So think about that, $200 billion. Unbelievable. So if you take, again, and you think about how we've been propping up this consumer so he keeps spending, we increased the money supply from 8 trillion to 22 trillion. What is that? That means you print money, you shove it into the banks so the consumer can go buy stuff they don't need, they don't even want, right? And then it also takes that money and the banks loan it to corporations to do stock buybacks to push their earnings up, which are fake when they do that. It pushes up the stock market, which is fake. It's a bubble. It's all a bubble, right? And so money supply was increased from 8 trillion to 22 trillion. They shoved in $6 trillion into COVID, right? And remember, they didn't have any of this money. There's no money. That's what they had to print it all. They had to print it all. And then the stock buybacks, they printed another 5 trillion. So they printed 8 trillion to 22 trillion, another 6 trillion for COVID. They printed another 5 trillion so companies could do stock buybacks. And those deficits are increasing because of that. That's why the consumer, and that's why we keep propping up the consumer. We just keep propping them up. And now they depleted their savings. That's right. Savings, remember, was in 2020 was up 30%. Now it's 2.3%. Home builders, if things were so good, like they're telling us, and the consumer's so strong, and the labor market's so strong, why is it the new home builders are dumping their homes, okay, so fast? They're cutting prices at such a pace, the fastest pace they've seen in 3 years. Why is it the economy's so good that Amazon Prime subscriptions have just dropped 14%? People can't afford it. Now, let's take these 60% of the homeowners who have mortgages below 4%. You're never going to see that again, at least not in my lifetime. Think about that. Mortgages below 4%, 60% of them. 60% of them below 4%. That's not going to come back. If that was coming back, then you wouldn't see for the last 32 months that the 10-year Treasury has not come down. It's been stuck at 4.22. And the other evidence, again, going back to the Federal Reserve, their rate near 4.7, whatever it is, stuck for 20 months. So if those rates are stuck for, let's say, an average of 30 months, they can't bring them down, how on earth are you going to get back to mortgages below 4%? No, they're double. They're at 7% right now. They're at 7%. A little less than double, 7%. I mean, it's just crazy, isn't it? I mean, the real world and what we get told every day. And that's why I always tell my gang members, when we start trading, shut everything off. Everything's noise. Remember, the stock market always does what it wants to do, but never does what it's, the stock market never does what it's supposed to do. Let's put it that way there. I'll get a little tired here. So now, so the builders are in deep trouble. Deep trouble. And 25% of American jobs pay $15 an hour. $15 an hour. That's it. This is crazy. And they keep, and unemployment, they keep saying is low now, is below 4%. That's a bunch of nonsense. And remember, we keep running deficits so we can keep sparking all this nonsense. We can spark wages, we can spark home value, we can push money around. So we keep running, but these deficits are catching up to us now. They're catching up to us. Our GDP growth, okay, or this is first quarter is 1.6%. Now they say, well, the second quarter is going to be 4%. No, it's not. It's not going to be 4%. That's insane. And again, our debt. Think about our debt to our economic growth. Debt to GDP should be 60%. We're double that. What's that mean? That means that when we sell bonds, when we ask you to, hey, let's sell you bonds. We need to borrow money from you, Japan. We need to borrow money from you, Germany. We need to borrow money from you, China. What do? They jack up those rates. So here's the problem. When we're in such debt, right now we're in such terrible debt, and we can't get those rates down. Remember, our rates are stuck over 30 months. We can't get our Fed rate down. We can't get our 10-year rate down. So what happens is the government starts offering big money. They start saying, hey, look, take all your money out of the bank. Please take your money out of the bank and give it to us. We'll give you 30% more than what they're giving you. So people take it out of the banks. Now what happens? Now we're really screwed because that's called crowding out. So that means businesses, the small businesses and startup businesses, they're dead. When they go walk into the bank and a startup business, forget it. Forget the startup business. You're not going to be able to start a business in this environment. There's no money for you. Oh, they'll give you the money if you want, but give you 10, 11%. So there's no money for startup. In small business, you need a lot of. I know all these little business owners here in Sarasota. They can't get lines of credit for inventory. For inventory, why? Because they've been crowded out. Because we keep offering China and all these other people, Americans, big money on treasuries. So the GDP, our GDP growth is terrible, terrible. And they keep telling us how great the retail business is. But wait a minute. They spent $97 billion the last quarter. But their income was $45 billion. Where did they get that difference in money? Where did it come from? They borrowed it. Well, how do they get to, where's the money come from? The government prints it, and they turn around and they increase the money supply. And that's why I always tell my gang members, as long as you keep watching, there's two charts you need to watch. You need to watch your money supply here, right here. See that? They keep pushing money in, pushing money in to keep on pushing stocks up. See, they got to keep pushing money in. And they keep on increasing this money supply to fill the banks with more and more money. And so that they can take that money and give it to corporations, do stock buybacks to artificially push up earnings, to artificially push up stock prices, which stock prices right now are nuts. The valuations are insane. And if you're buying stocks right now for a long-term investment, you're out of your mind. But this is what you got to watch right here. The next thing you got to watch is the small mid-cap stocks. They tell you a lot. IWM right here. Okay? Now, IWM, I talk about this every day with my members. IWM, what the big money's been doing is going back and buying all these small and mid-cap stocks that have been beaten down. They're not buying the big techs. And the big hedge funds they're hardly buying at all. But this is the guy you got to follow right here. That's the guy you got to follow, IWM. Because that's the small mid-cap stocks. When that starts tanking, it is over. It's over. And again, you got to keep following those yields, those 10-year Treasury yields, okay? And if that 10-year Treasury, remember, it's the Fed that's got to make the move. The 10-year Treasury yield is really driven by the Fed. Now, what do I mean by that? The Fed doesn't control it, but the Fed can drop their own rate, and by dropping their own rate, then it induces the 10-year Treasury yield to go down. So you get more and more people buying. When they see the short-term rate go down, more and more people start buying the 10-year Treasury, okay, to try to get that yield down. So at the end of the day, the wealth is controlled in a little area. And they're just like, go back and look at 2007, 2008. The same thing happened back then. Wealth was concentrated with the 10% who control 90% of the stocks, the wealth. The 1% who controls 35% of the wealth. The 1% controls 17% of the wealth. And then the bottom 50%, those people, 2.4%. And you know what's really bad? That dope in New York City, the communist who's going to run for mayor, and see, the very, very top who run everything are owners. They control everybody, everything, right? What they've caused is all these professors 20 years ago, 25 years ago, they are socialist professors, and they started to teach our kids 20, 30 years ago, these kids now who are bankers and are lawyers and are really, all they think is socialism, because they want everything free. Because if you're part of that group that controlled 90%, okay, of the stocks, or 36% or 17%, if you have a net worth of 62 million and 13 million and 2 million, you're set. But the bottom 50%, they have a net worth of a squat, nothing, okay? So all these professors been taking parking space in their ears for the last 20, 25 years. Socialism. We did this to ourselves because you have a greedy few. And that's why, people don't think this guy is going to get in New York. Oh, yes, he is. Look at the communists they put in Chicago. Look at him. Then there's another guy, Minneapolis, I think it is. Another communist who's running for mayor there. Because these kids were all indoctrinated going back to 20 years ago. So what do you do to make money? Well, let me tell you what I tell my members every day. We stay with stocks, okay, that are what we call power stocks, the best of the best, okay? And as long as those stocks, every time, like today, the market went down, here, let me give you one of my stocks. Let's take, where was it? I can't see it here. Best, let me give you one of mine. You might know just because I'm looking for it. By the way,
30 seconds.
Don't forget your goal. Don't give up on your minors and your GLD. Okay, those at some point are going to really rock and they're going to really take off. But what I'm trying to say is this. You want to stay with stocks like this here, okay? This is our ETF we're in right here. And that nice, you see that beautiful pattern right there? It's above the moving averages. These are the guys you stay with because that's where the money is going. When you get a down day like we're down 200 points right now and that stock's still going up, that's what you want. We'll show you how to do this at Phil's Gang, free for 10 days. Check it out. Join my gang.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's Phil's. 4264. That's 877-600-4264.
It's up to me.